Good morning, everybody. Hey, welcome to Wednesday, July 29th. Hey, 2 days left in July and it's gone. Thanks for joining us today as we get ready to talk with Dave. Yesterday was ended up not such a good day, and we'll talk about why when we come back here with Dave next.
Good morning. It's 14 now before 9. Time to check in on your money and see what Wall Street's doing this morning. And after a week in which pretty much the value of the companies were driving business, we got a whole bunch of news driving the markets today, as well as a boatload of earnings. Let's get to it right away. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler's on the line. Phillip, good morning. How you doing?
Hey, good morning, Dave. Hey, doing well today. We did see a fall yesterday that was not really kind of expected as we talked yesterday morning.
Yeah, I didn't see any news that really would contribute to it, but the Dow was off 205 points, NASDAQ off by 134 again. That was 1.25%. It was another precipitous fall. And the Standard & Poor's was off by 0.6%, down almost 21. What did they give it credit for causing anyway?
Well, the biggest thing that I heard on the street was that the whole new HEALS Act, which is supposed to be passing here, got held up. And so there's some dissension between the Republicans and the Democrats. And so it's definitely slowed down that process of getting approved and going to the president's desk. And so because of that, that means the money that they anticipated isn't going to hit the economy fast enough, which means there's a possibility that people aren't going to get that increased retirement check, or not retirement check, but unemployment check, because it ended basically this last weekend. And so, go ahead.
I was going to say, in other words, investors expect Congress to do what Congress does, and which really means sitting around with their thumb in an uncomfortable place and doing nothing, right?
Exactly. There was optimism yesterday morning, and that waned throughout the day that it was going to get passed quickly. So the money's going to dry up quicker than it's not going to be replenished as fast as expected.
Understood. We got 48 hours, by the way, before that unemployment kick from the federal government expires. So Congress has a little bit of a gun to its head. We'll find out whether or not they can respond to it, or whether or not we're going to go through a week and a half worth of conniption fits in the markets. I was hoping that wasn't what caused the downtick, but I guess I'm not surprised.
Hey, let's face it. If they could get their act together and move quickly on anything, it'd be a miracle.
Yeah, it ain't going to happen. I'm kind of cynical about politicians in general. Boatload of news going on today. One of the things to watch on the NASDAQ exchange is going to be virtually every high-tech CEO that you've heard of in the country is going to be hauled up in front of Congress, virtually, I gather, but still in front of Congress, and the congressmen are going to scream at them and threaten antitrust action over businesses that didn't even exist 10 years ago, which is kind of surreal in its own point.
Well, that's true. And it's going to be interesting to see how that falls out and what questions get posed, how they get answered. That will have some implication, I'm sure, today on what happens in the marketplace. But, the bigger thing for the market today is going to be the Fed.
Absolutely. Nobody expects an interest rate change, but what they're going to do as far as their bond buying is concerned, and reading the tea leaves between the lines, that's going to be interesting about 2 p.m.
It will be. It's going to be, interesting to see what that report says, what gets deciphered out of it, and how that affects the markets late this afternoon.
Absolutely. And as usual, when the Federal Reserve meets, even when they do nothing, the stock market charts always look like a seismograph about 2 p.m., don't they?
Yeah, they do. Yeah, there's lots of things happening in the middle of the day.
Absolutely. One other report that's going to come out a little later on today that may very well affect some of the oil stocks. There's a boatload of petroleum inventory reports coming out. Gasoline inventory, oil inventory. We're comfortably over $40 a barrel now, but if we end up showing up with an economic slowdown and a big glut of inventories, that could screw up the oil patch and screw up the price of oil as well. That might affect some of the Dow components.
It could very well do that. The other thing we have coming out a little later today is pending home sales. And I think that will have an impact also.
And the word was that mortgage applications last week dropped for the first time in about a month and a half. So that might even weigh a little bit heavier when that report comes out.
That's true. So we'll have to wait and see. It's always interesting to see when those reports hit the ticker, what happens in the marketplace.
Absolutely. Like I said, a whole lot of news driving the market, in addition to a whole pile of reports from companies that reported their quarterly earnings. Tale of two G's, both of them had big sales drops, but both General Electric and General Motors actually did better in a crummy market than analysts expected, I gather.
They really did. But they lost money. So and in some cases more than expected. General Electric lost 5 cents a share more than expected. Revenue though was above what the forecast was. They're still seeing weakness in their power and their aviation business, but unexpectedly they had better free cash flow than expected. And that must be the metric everybody's looking at because they're trading up today 1.6%.
Cool. The other G was about the same thing. A crummy quarter for General Motors, but not as crummy as they expected, I gather.
Well, and General Motors was much better than expected. They only lost 50 cents a share. They were expected to lose over $1.70 a share. So wow. A big beat on that time frame. Revenue though was below what was forecasted. That's because they had to close plants because of COVID-19 throughout this last quarter. But people liked something in that report. Didn't jump off the page at me, but they're trading up 4.25% this morning.
The one thing I saw on the news item was they gave credit to a lot of big pickup sales and cost cutting in order to keep their volume up. And they saw at the very least the core business doing better than expected.
Well, that's good. And they didn't lose near as much as it was expected, which was a good thing.
Oh, yeah, that was a big beat, even if it was in the negative side of the ledger.
Right, exactly. You're right. That's true. So let's look at airlines. Well, not necessarily airlines, but Boeing. We talked a lot about Boeing last year and a half, 2 years. Yeah, they had a horrific loss. They lost $4.79 a share. They were expected to lose $2.54 a share. So a huge difference there. Revenue was also below what was forecasted. So they're obviously having issues, but they're trading up this morning about 0.75%. So,
the question becomes why?
Exactly. And I can't see it. I can't see it anywhere in there. But I get a really, brief report, not the in-depth stuff. So we look at the healthcare industry. We got Anthem, the health insurer. They beat. They came in at like $9.20 a share, about 40 cents better than expected. And they're being helped out because people couldn't do elective surgeries, so they didn't have to pay out claims as much during this time frame. They were up about 0.3% today.
I got to believe that's going to end up being kind of one of those other shoe drops proposition as those elective surgeries started resuming over the last month or so, and those insurance companies are going to be paying out more. If it's cost savings, that isn't much of a comfort to a stockholder there, is it?
No, it's really not. And you're right. Some of those things are going to start to pick back up and be a different thing this next quarter. We had a huge beat. Scott Miracle-Gro. They had a better than expected earnings and revenue. It must have been really good. I don't have the exact numbers, but they declared a $5 per share special dividend.
Wow.
Yeah. And they raised its regular dividend by 7%. So they've seen a much bigger demand in their product. They're trading up almost 10% this morning. They will actually open at a new 52-week high day.
Wow, I guess can't go out. Might as well fertilize the lawn is kind of the reaction, huh?
Yeah, I guess so. We got Starbucks reported. As expected, they lost money, but not near as much as expected. They lost about 13 cents less than was expected. Revenue was also better than expected. So they're seeing a steady improvement in their recovery because of COVID-19, and they are trading up almost 5% this morning.
That's good to hear. Got time for one more, another household name that you noticed.
So let's talk about Visa. Visa came in at 4 cents ahead of what was expected in earnings. Revenue was expected, was better than expected also. You know, Visa's kind of a bellwether, right, of how much people are spending. Their volume was down 10% during the quarter compared to the previous year. And their profits were down 23%. But they still did okay, right? But they're trading down a little bit. I think people expected a little bit better out of them. And I think that retail number, sales and processing being down probably is affecting them a little bit. They're down almost 1.5% this morning.
My bet is that 10% is going to be pretty close to a quarterly number for consumer spending. Like you say, the big credit card companies are almost a consumer spending measurement, aren't they?
Yeah, they really are, because that's especially now, because everybody's saying, you know, we don't want cash. We want you to use a card. And so that 10% may be cloudy, right? Because that wasn't the case in the quarters before.
Yeah, it might even be a bigger portion of the spending picture than it normally is, which would be kind of scary.
Yeah, exactly.
Off day yesterday on Wall Street, kind of a surprise, as we mentioned earlier. Phillip, 45 minutes before we opened this morning, do we have a turnaround in process?
You know, we are green. However, we have seen that green diminish this morning since I started watching it. We have got the Dow is up $40 right now, which is about 0.15%. We've got the S&P 500 up almost $9. That's about 1/3%. And we've got the NASDAQ up about 0.5% before the market opens. Switching gears to the commodity side of the coin, we've got gold and silver both up. Silver's up 0.5%. It's up to almost $24.50 an ounce. And we've got gold up 0.5% also to $1,953 an ounce. Crude oil is heading up this morning, Dave, but it's about where it was yesterday morning, up about 0.8 to $41.36 a barrel.
It's going to be interesting to see what happens when the inventory report comes out later on. World markets overseas, Asia was mixed at the close. Hong Kong up by a bit, Japan off by a little bit. Europe generally trading a little bit up, but they look like us. We're talking about 0.1% midway through their day. Phillip, retirement's on a lot of our thoughts right now. How do I get a hold of you to make sure my retirement is stable and something I can count on?
Dave, you know, now's a great opportunity to get a second opinion on your current portfolio. Give us a call at 863-382-0037. Hey, catch out our website, statlerfinancial.com. Website is one place. You can catch us on Facebook. Just search under Statler Financial Services. And then every weekend, the Statler Financial Radio Show is right there for you, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All right. Stream both of these things, including our efforts here on Light FM, and we'll see you here tomorrow morning. Fair enough?
Fair enough, buddy. You have a great day.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. Hey, if you like what we're doing, please like our page on Facebook and share this with your friends and family. We'd like to get our page likes up substantially. Share our page also. Thanks. Appreciate it. Look forward to speaking to you again tomorrow.